Welcome to EDHEC-Risk Institute. Today we're going to talk about how robo-advisor and digital technology is disrupting investment management, investment and wealth management. Well, let's talk about those robots, the rise of the machines, as we call them. I mean, clearly they're already amongst us, those guys. I mean, they don't look really scary. They look kind of friendly and nice, and they're meant to help us manage portfolios and manage our wealth, which is kind of nice. So let's keep it in mind. As you know, they're already around, and a number of them exist in many different countries, and they already are in place. The reason why we expect them to be extremely useful is because they will allow us to take the cost of distribution down in a very substantial manner. And the cost of distribution, if you have to pay for a retail distribution network, well, the fact that we have to pay for this distribution network implies that fees have to be extremely high, higher than what they should be in financial products. And typically, distribution costs are actually higher than production costs. Now, with digital distribution through robo-advisors, then, of course, the cost of distribution is going down. It's virtually zero. So that's not exactly surprising that digital disruption is now impacting the wealth management industry, as it has impacting, the travel industry or other, industries around the world. And the key question, of course, that all players are asking is now, well, is it a threat? Is it an opportunity? Is it something that's going to be passing, or is it something that's here for the long term? So these are the kind of questions that we're going to try and discuss briefly in this presentation. Okay, so first of all, what are they and who are they? Well, so this is the official definition from Investopedia for a robo-advisor. It's an online wealth management service that provides automated, algorithm-based, meaning no human intervention, algorithm-based portfolio management service and advice without the use of financial planners. Well, when you're looking carefully at the existing landscape of robo-advisors, I think there's a useful distinction to be making between three different kinds of players. The first kind of players are the pure players, the new players. They are new to digital wealth management. Examples are like Betterment, Wealthfront, and Nutmeg, and these are names of large and some of the largest robo-advisors. And they are pure players, just being launched for the very purpose of providing automated wealth management services. Then you have existing players, and existing players are themselves of two kinds. You have the existing players in the digital space that eventually would like to enter wealth management and that are not doing wealth management. So, I mean, one very good example is typically the online brokers, right? So if you think about, say, Charles Schwab, for example, well, it's a big online broker, and given that they are already having a relationship discussing financial products with end users, the question is now, well, would that make sense for them to add to their platform a new service? And the new service would be all about helping people form portfolios. So far, you can use an online broker to buy securities and funds. And then the next step is to use the platform as well to get advice for how to put together all of these building blocks. So that's making sense. Well, this is the first obvious example of an existing digital player that would eventually jump into the wealth management space, and that has actually happened for people like Charles Schwab. Now, you could also envision that down the road, other players like the Amazon, for example, of this world, would that eventually start distributing wealth management services. And given that they have obviously a brand name and a customer base, then as long as they can acquire a little bit of financial expertise, that's something that's perfectly conceivable. We have reasons to believe that in Asia, for example, companies like Samsung Asset Management or Ant Financials, for example, which is the financial arm for Alibaba, are actually jumping into that space as we speak. Now, the last category would be the existing players in asset management or in wealth management that would like actually to shift or to add to their services a digital component. So whom are we talking about? Well, we can think about the vanguard of this world, like one of the largest asset managers, and they have a very good reputation and a very good brand name. Or you can think about, Merrill Lynch Wealth Management, for example, who's a well-respected wealth manager, and they are, of course, now offering digital services as well. Those robots, are they scary? Are they going to take over the investment world? Well, it's very hard to tell the future, and there's people who are typically trying, and most of the time they would fail, so I'm not going to try and predict anything. I just would like to comment on the fact that if you look at the current projection for 2020, we're looking at something like $2.2 trillion. It's sizable, but it's very small compared to the entire wealth being managed. So, so far, they are still pretty small. These are examples of some of the largest robo-advisors, and we're talking Betterment, Wealthfront, and Vanguard, and some of these guys. So we see the names over here. What I think is important to mention is that they are actually all over the world. In the US, of course, first, that's where it all started, but also in other countries as well. So in the US, the largest ones are Betterment, Wealthfront, Personal Capital. Those three have more than $1 billion US dollars in terms of assets that they either manage or advise. And then there's a large number of smaller robo-advisors. In the UK, Nutmeg is the largest one, 50,000 users at the latest count, but there are others like Wealth Horizon, Zen Assets, and others. We've got a number of them in France as well, in Italy, in Germany, and again, I was talking about these Asian players that are actually big players up and coming very, very strongly. Okay, impact on existing players. So remember we were wondering whether, eventually if you think about Schumpeter, a prediction of, statement about creative destruction, that the fact that as new technologies and industries are being born, then they would eventually blow away the existing players. So is this what's going to happen? Again, it's a little early to be able to say exactly what's going to happen, but I think it is fair to say that the rise of those robo-advisors can be regarded both as a threat and an opportunity for existing players. The threat aspect is pretty clear. Let's talk about the opportunity aspect of these developments. On the one hand, if you think about a sizable wealth manager that would like to reach out based on their existing brand name and expertise and credibility, and if they would like to reach out to a part of the world, a region where they have no physical distribution network, well, that gives them a very quick and easy access to any market, right? Just digitally as opposed to physically, so that's kind of nice. They could also get access to individuals that are slightly different from their core business. So if you think about a wealth management boutique that specializes into addressing the needs of extremely wealthy individuals, high net worth individuals, as we call them, well, the same firms wealth management firms could eventually start addressing needs of less wealthy people. Let's call them mass affluent, for example, affluent or mass affluent people, just using automated advice and making it scalable and reasonably cost efficient. And also in terms of, not only in terms of wealth level, but also in terms of age. Most of the clients of wealth management services tends to be on the older side of the equation. Now, of course, with these digital wealth management services, then you can get access to millennials. And these millennials are reluctant to use typically, traditional wealth management services. We should also be very careful in terms of looking at what's taking place in terms of initiatives from asset managers that are supposed to produce building blocks for wealth manager to distribute to clients. Well, people like Vanguard and BlackRock, and we've already talked about Vanguard. BlackRock is, the largest investment firms in the US and in the world. Well, these firms have a strong reputation, and they could very easily decide to reach out to clients and start a B2C business direct without having to go through, wealth managers, intermediaries. Remember, in this context, as in many other contexts, the deciding factor will be the brand name. So either we're talking about an existing brand name, or we're talking about a brand name that is being built by burning marketing dollars to kind of, promote the brand name. But in the end, beyond the financial expertise, the brand name is going to be the key factor.